growth rates in some countries that are shooting the lights out. But results from Barclays Africa show that markets in several African countries are coming under pressure. Barclays Africa has reported headline earnings up at 10% to 13 billion rand in the financial year that ended last December. It says credit impairments helped improve the bottom line, coming down by 10%. The lender says it is on track to achieve its three-year strategy that was implemented last year. Barclays Africa is, of course, a major player on the continent after it was formed through a merger between ABSA and Barclays Africa's operations in 2013. Our reporter, Nompumelelo Siziba, caught up with CEO Maria Ramos today. She started by asking what the main drivers for the bank's recent performance are.
We are 1 year into a three-year strategy that I spoke about last year, and we are on track. We actually are firmly on track in the delivery of that strategy. Our retail and business bank is delivering results, and we in South Africa. So the turnaround of our retail and business bank is on track. We're starting to see a good recovery in our customer numbers. Overall, our customer numbers have now stabilized, and we're starting to see new-to-bank customers up 7% for the year last year. And in fact, in the second half of the year, that number is 15% up. So that's really, really good for us. We're starting to see some other metrics in that space look good. And so if I look at our numbers, for example, in our rewards program numbers have increased by 27%. So we now have 1.8 million customers in the rewards program. Our numbers in terms of our internet client base have increased nicely. So we've got 1.4 million customers transacting with us through internet or through mobile. So all of those client metrics have started to turn around.
Maria, in the South African retail banking space, how is the consumer really doing? We see that your credit impairments are down, and yet we're always hearing that the consumer is under pressure. So are those impairments down as a product of what you've been doing as Barclays Africa, or are consumers doing better in your view?
You'll remember that we have, over the last couple of years, put a significant amount of effort in improving our collections and improving the quality of our books, particularly our home loans book. You can see that in different metrics. You can see that in the number of properties in possession we have. We've got, I think, 132 properties in possession. That's 94% down on 2 years ago. So, I mean, we have actually put a lot of effort into making sure that we've got the right policies, that we are collecting properly, that we've got the right quality credit, and that's important as well from the consumer's point of view.
What has Barclays Africa done to ready itself for the announcement made by Treasury about the new savings accounts that are going to be available to the consumer? Are you ready?
We have been working actually quite closely with government, and we've been looking at this quite closely ourselves and how we respond, and we will be ready with a product that completely addresses that in the not too distant future. So when it goes live, I'm confident that we'll be able to respond to it.
Maria, some investors worry about companies, not only Barclays Africa, but other companies going into the rest of Africa too hard, too soon, because we've seen companies like Tiger Brands get burned in some jurisdictions. So what due diligence measures do you take when you look at going into Africa?
We, in doing the Barclays deal in 2013, acquired a portfolio of assets across Africa that we understood, because Barclays had been in those countries for a very long time. Barclays has been in Ghana for 100 years. It's been in Kenya for almost as long. It's been in Botswana for 80 odd years or 90 years. So these are countries in which, as Barclays, we've been in for a very, very long time. And so we are we are as local as the local banks, and yet we've got a global presence. We're part of a global group. So that's important to understand. And for us, our main focus is going to remain our existing portfolio of assets.
Staying with banking, the administrators of the failed South African lender African Bank now say that they are in talks to appoint a new chief executive by the end of the month, and we'll watch that closely. Well, those company results keep pouring in. Yesterday, the JSE was down, but it ended the day in positive territory today. Let's take a look at your main financial indicators. Great to have you with us on Business.